Hello and welcome to all the Web3 enthusiasts. This is Max speaking, and welcome to the new exciting episode of Synopsis. Today, I'm honored to host this one with Chris Yin, CEO and co-founder of Plume. Hello, Chris. How are you today?
Good, good, good. How are you doing? Thanks for having me.
Yeah, I'm also doing good. So, see, you're in a good mood. It's always a great sign. So, the interview is going to be positive and
Yes.
hopefully insightful. So, as I said to you during the intro, we have a lot of questions for today. So, about the average. So, let's see how it goes. And to begin with, and to warm up a little bit, could you please tell us a little bit about your background and how you joined the Web3 sphere?
Totally. Yeah, I mean, a few things. I'm, I'm Chris. I'm the co-founder and CEO of Plume. My background is very simple. I've mostly been in enterprise software and kind of building in startups for a long time. I was in venture before. I was doing software. I've been in startups for a bit. And long story short, I built a few different companies. My most recent one before I went to venture was working at a place called Rainforest QA. One of my friends was running this company. He asked me to help run product there. And what we were doing there was we built a product that sort of was a automated version of Mechanical Turk at the time, right? So I mean, you push a button and people around the world come test your software for you. Focus on QA, right? And so when we did that, it did two things. One is, you have a community of 60,000 people around the world testing your software and building products with you, right? And so the number one thing from those people was realizing that, hey, very quickly, look, getting paid is a pain in the ass there, right? And so we really focused on helping them and building all kinds of off ramps and native currency and everything. And so one day we built a forum and asked them like, "What do you guys want? How do you guys work here?" And they all said the same thing, which is like, "Look, we like working with Rainforest, but we hate getting paid in our native currency. We really wanted to rather get paid in BTC and ETH." And so that's kind of got sucked into crypto, and it was right around DeFi summer. And so like started to kind of follow all of that at the same time as DeFi summer, and things started to really pick up. And while I was doing that, went to venture. I got a couple of angel investments started to work out really well, and so I went to go there. And while I was doing venture and was following a lot of what was going on. I was doing a lot of retail stuff, helping friends get projects started, and was just kind of in the mix at that time. And then when everything went to hell, and FTX kind of happened, and Terra and all this kind of nonsense, I was kind of sitting there with my friends and thinking about what to come next. And at the time, we realized that sort of we believe that it was sort of the bottom of everything. And we really believe we're still big believers in the future of crypto and everything. And we focused on wanting to grow crypto and bring things back. And so we had focused a lot on this idea of growth and building the next thing within crypto. And it led us down this path of RWAs and led us down this path of real things. We saw a lot of attention there and a lot of interest, but not much interesting stuff being built there. And we sort of realized that there was a few things happening, and it was unclear if it was good or bad, but we realized at least there was change happening in this market, right? Meaning it seemed like at an end user sort of like bottoms up perspective, people wanted real yield. People were interested in the treasury, people were interested in T-bills, people were interested in SDI and things like that. On the other end, you could see that sort of the regulatory side of things, people opening up, right? The ETF was around the corner. You had things like, the sort of election coming up and all these things that seemed to be positive. And what we didn't realize that Larry Fink and BlackRock would get so excited about this and really push it in the right way. And so fast forward to today, it's much faster than we ever thought it would be. But I think we picked sort of the right spot. We're in the right place. We just talked to protocols. We followed our nose and we sort of started building things for them. And, next thing we know, we are here. So anyway, that's kind of how we got here and what we're doing.
Wow, awesome. So I feel so much energy in just this first answer and feeling that you are fully charged for the hot discussion. So
Good, good.
let's get to the main part. So of course, since we're discussing Plume, today we're going to discuss a lot of things about RWAs and RWFI. So the first question, the big one is, how do you, Chris, think how big are the real world assets and RWAFI markets right now? What are your expectations about its growth, and also what market shares does Plume aim for in it?
For sure. For sure. I mean, I think there are two ways to look at market size for RWAs. Number one is the one that we say a lot, which is it's huge, bigger than ever, right? It could be everything, right? And I think it's true, right? In the sense that, like, at the end of the day, if you look broadly, the crypto market is at about $3 trillion, right? Give or take in assets, right? And the RWA market, which is a collection of many things, stocks and derivatives and, real estate or whatever it might be, right? All these things combined is at least 1,000 trillion plus, right? So many, many orders of magnitude larger than electric today. So that's the opportunity here, right? But now if we zoom into today, what's actually here, right? I think the market on RWAs for today is actually very small. That's, of course, if you don't count the stablecoin. The stablecoin to me is the only RWA that matters. And the only RWA that's shown any proof that has real demand and usage, right? But if you look at the different RWAs today that are happening out there, right? You just look at RWA.XYZ or look at stats out there, you realize that the market today is not huge. In sort of the numbers that are about 20, 24, 25 billion, right? In assets on chain right now from an RWA perspective. It's grown a lot. You know, when we started, it was I think 12, 15, you know, so it's grown a lot in the last year or so, right? But if you peel that back even further, you realize that half of that is private credit, right? And private credit's not bad, so it's not a bad thing, but half of that is actually just figure. Right, so it means it's not useful private credit, right? It's just being held on a blockchain, a private blockchain nobody can use. So half that's gone, so it's about 12, right? Then of that, you look at that, okay, a bunch of that is just like, you know, gold or this and this, and so like you pull that back, really you're talking about, you know, a bunch of T-bills and some gold. You know, that's kind of like what we're looking at today, right? So it's still very, very, very early in this cycle, right? And so I think the market is much smaller than people think it is today. Right, people are very excited. The truth is, if you look at stats what people are doing on chain when it comes to RWAs, it's not big, right? That's why today, only 2.5 weeks after we took out the mainnet, right, for Plume, we are already the #1 chain by RWA holders in the world, right, across all of crypto, right? You know, if you go to RWA.XYZ again, you can see right now we've got over 103,000 RWA holders on Plume, right? Next up, #2 is Ethereum with 75,000. #3. I think it's Avalanche or Solana at 7,000, and then 7,000 after. So a little bit under half of all of the RWA holders of crypto are on one chain, just on Plume right now, right? And we've only been out for 2.5 weeks, right? So just to show you, right, like we could be #1 there because we're great, right? Of course, which I think we are, but also it's because it's not that big yet. We're able to really make a bunch of moves and come back very quickly and be one of the first movers to really do something interesting and something new here, right? So that's kind of what I think it is today, right? It's actually not that big because you can put up big RWA TVL numbers, right? 12, 15, 20 billion, right? But you can just issue those things. What we really care about is the demand side, not the buy side. The demand side is what people are actually buying, what people are holding, what people are using, not how much you're issuing. It's easy to issue $1 billion and have nobody hold it. It's harder to get a lot of people to actually use and hold it. That's why we always think RWA holders is the metric that matters, right? And so I think it's actually quite a small world today, but it's growing quickly, right? I think it's very clear that that's also directionally where a lot of the activity and intentions are going. So it's going to grow a lot. So I usually think, you know, building a company is very simple. You want to build in a market that is growing quickly, right? You want to be in a small market today, but tomorrow's a big market. So you can be the bigger fish. And as the pool grows, you continue to stay along with it. So that's kind of where we are today. You know, it's a fairly small market. I think realistically, you're looking at, you know, of the 12 billion, you're looking at maybe like 6 to 8 of addressable billion, right? So it's tiny today, right? And of that, you know, if you look at the number of users that are actually interested in doing this, it's even smaller. So that's kind of where it is today. I think it's actually quite a medium-sized market at best, you know, but it's growing very quickly, and so that's what people are excited about.
Ah, awesome. So yeah, it's completely understandable, and real world assets is, I would say, one of the most, maybe one of the out of top 3 hottest topics to be discussed right now. So besides AI and AI agents and stable coins, which are actually maybe a part of RWA. And yes, to speak a little bit more about what's happening right now with this, as you said, medium scale market. So what are the areas, in what areas are the biggest RWFI innovations are happening at the moment? So not for some forecasting or trends, right now.
Yep. So right now, there are 2 things that are happening that are pretty interesting. #1 is the introduction of RWAs on-chain, right? And that's been a thing for a little bit, but it's actually starting to happen at a very aggressive rate now, right? A lot of new protocols, a lot of new companies, a lot of new businesses are trying to incorporate RWAs on chain now, right? And so you're seeing things get tokenized that haven't been tokenized before. So, you know, whether it's gold, whether it's equities, whether it's this and that. So a lot of things are happening with RWAs, right? So that's a great thing. It's a lot of excitement, a lot of interest, a lot of people trying to tokenize things. On the other side of the spectrum, it's a lot of protocols not trying to make RWAFI and DeFi work for these RWAs, right? So you're seeing protocols like Morpho, you're seeing protocols like Mystic, you're seeing protocols like Euler or whatever, right? Trying to consume these RWAs and put them into DeFi context, right? And make these things useful for each other, right? So you can actually begin to do things like looping and lending and borrowing against them, right? So both those are sort of important and critical piece of the story where you need to be able to suck things in, and then #2, make them useful. Right. And both those things are happening right this second. It hasn't really been nailed yet, right? And it's beginning to happen. So I think it's actually very interesting to see what's going on there. I think one of the things most exciting to me is a company called a protocol that we have called Nest, right? Nest is one of our protocols that sort of lives in between these 2 things, right? Nest is our yield distribution protocol, right? And so what we do is we take RWAs and real things, we put them into different vaults, we make them composable and usable and liquid and permissionless for people to use, and then allows people to take those and put those into other protocols, right? And so if you look at if you look at Plume today, if you go to Nest, you can go to our vault anytime, or maybe a private credit vault called NCredit, our T-bill vault, NT-bill, or N-alpha, which is a collection of many things. You could just stake your stables, take out a receipt token, right? Earns yield, put that into Morpho, loop against it, and then take our loan and loop against the thing to really lever up as well. So that's kind of an idea of like what's going on. I think is really interesting that people are trying to do right now. People haven't really cracked this. People sort of don't really understand the dimensions of doing RWAs and DeFi, but we have begun to crack it, and it's showing some results right now. So with Nest. So anyway, that's what I think is kind of happening in RWAs.
Wow, awesome, thank you. And now time for, I would say, the most yummy question for you as for the founder. So could you tell us what is Plume's role in RWFI actually?
Yeah, totally. Look, so we see our role very simple. We started Plume with one very simple idea, right? We wanted to grow crypto, right? And the idea was at the time that we preferred doing things on chain, right? We loved sort of the on-chain experience and how to do things and the ethos of doing things on chain where things are open and permissionless and anyone can build anything anytime, right? That's what I want to do. But the problem was we realized at the time that it was fairly limited, right, in what you could actually do, right? You could only interact really with shitters or maybe some tokens here and there, but you can't really do much else, right, with these types of things. And then secondarily, you look around and realize, well, there's actually not much growing here, right? It's all kind of the same stuff. We're doing the same things in the same place. We're taking DeFi protocols, putting them onto new chains, finding new ways to kind of, finding new ways to rug each other on new places, right? And so what we want to do is grow off crypto so you have a counterbalance to these things. It doesn't mean it's bad. It means we should do both, right? And we really follow the path of the stablecoin and follow user behavior, right? Which, in my opinion, is, when the world is up, people hold tokens and people want to hold tokens and alts and shitters or whatever, right? And when the world goes down, right, people rotate into RWAs, which is today just a stablecoin for the most part, right? And so this behavior where you have both dimensions is already happening, right? And what we saw was that there was clear demand and draw for it, but the products here were not useful and they were hard to access for most people, right? The beautiful thing about the stablecoin is it's just crypto. I just swap into it, I hold it, it's composable, I don't need to think about it, right? Versus the classic view of the RWA is if I wanted to actually get the RWA, right, I have to KYC, I got a KYB, I have to be permissioned, I have to, sometimes I have to be a QP, $5 million minimum, I have to do all this nonsense, it's $1 million check, I can only withdraw once a quarter. All these rules, problems, that make it very hard to use. So I've always thought it was a user experience. You just don't I can't rotate, I'll just rotate stables, right? And so that's kind of the idea, which is like, we wanted to enhance the types of things you could do here, right? And we realized that in order to build these assets and bring these things on chain, you needed a whole ecosystem because we started off just building a tokenization engine, right? To actually tokenize things, put them on multiple different chains. What we realized though very quickly was that you needed a full stack ecosystem to not only tokenize them, but once you tokenize, you have to find someone to buy them and make use of it. You have to have an ecosystem that makes it useful to make the asset better than it was off-chain, right? So that's why we went down this path to build this community, to build this ecosystem, to build this network, focus on RWAs, in order to build a safe haven for RWAs to come in and find adoption and growth and volume and usage, right? So then the issuer has a reason to engage in crypto, right? And sees it as an opportunity to actually grow and build something new here, right? And then once we have that, we can then take it around to other ecosystems and other places. Right. And so that's kind of what we're doing with Plume today. We see Plume as the best place to sort of incubate and build and grow these RWA projects. We are the only ones that really focused on this area, right? People do it today across everything, but we are focused on this, meaning our entire ecosystem is built for this, our team is built for this, and our everything we do is built around RWAs, right? Which means we can spend the time to go very deep with the institutions, right? To learn what they want, to help them, help educate them, to help build things for them, right? And get them on chain in a very systematic way and to do it in things in a way they understand. That's number one. Number two, we can build products and protocols in a way that fit those things, because most things, again, crypto things and real things are just two different things. And so being able to use the same protocols to use both these assets is not that easy today, right? And so we can sort of mold and modify these products and ecosystems to make it work, just like Nest is a simple example. It's our first one, right? Nest is our own version of a protocol, but that interacts with the real world, but makes it useful for crypto, right? And so it allows us to do both. And so that's the bridge that we think of this as, which is we want to be able to bring things in, make it very easy to find adoption, to find distribution, to find traffic, to find volume, to find velocity. And then from there, work with other ecosystems. Today we work with layer 0 with a product we call Skylink, right, which connects our product and our chain to multiple other ecosystems like Solana, like Injective, like many others. We have over 17 others that we're connected to. So now you can deploy once to Plume and find value and volume here. And also, if you wanted to get more, we can help you go to other places as well, right? So that's kind of the story for us and how we think about this. We are building this full stack ecosystem where we combine custom software, right, custom tooling, a chain, right, a community, an ecosystem, and liquidity providers to make this whole thing come together to find a way to bootstrap this ecosystem, right? And from there, you can provide value, right? Because no asset wants to go somewhere and issue on chain and no one buys it, no one uses it. What's the point, right? So you have to build that coherent story. And then from there, you can keep building and growing this ecosystem. So that's kind of how we think about this. So I'll stop there. Any questions, comments, or anything about that?
Well, so there was super detailed and super confident. That's what you expect from the CEO and a co-founder of a project. So great respect for this. And I think after that, from my side, no questions. If our viewers have some, and if you guys will have some questions left after the interview, drop it in the comment section or reach out to Chris directly on X. I do believe it will be possible to get some more deep dives. Yeah. And for now, yeah, thank you once again for a detailed answer. I would like to continue the topic of bridging things and
please.
Of course, I believe that real world assets and RWFI is one of the most important things to connect the real world, I mean, traditional finance and the on-chain world, and to contribute for the mass adoption. So, Chris, in your opinion, right now, what is the biggest roadblock to bridge traditional finance and crypto?
There's a more there's a more topical answer than a deeper answer. So at the surface level, I think the thing that's blocking the bridging of these things at the highest level is regulation, right? Regulation is a barrier, and not because regulation is the issue, but because regulation causes fear, right? It turns out rules are always meant to help the end user, right, and protect the end user. Right? As a simple example, Uber was illegal for a long time, but people like to use Uber, so the laws changed, right? And so anyone blaming regulation doesn't understand what they're doing. Regulation is an excuse for products that aren't built very well, right? So that is the first problem, though, because even though regulation isn't the actual issue, it does cause a lot of folks around the ecosystem to be wary and hesitant to engage too much. So that's one big area that is getting resolved right now. For us, we worked with we went to the Treasury, we went to meet the SEC and the crypto task force there. We've met with folks in Abu Dhabi and in Hong Kong and different places to begin talking about how do we modify and think about using regulation in a positive way to grow crypto versus to inhibit it. So that's one area, right? It's not a direct impact, but it's a sort of wrapper impact, and it has subtle effects after that. Number two, I think, is more at the sort of process and just the actual workflow level, right? Meaning, at the end of the day, taking things on chain is still very difficult, right? You still have so much process to get on chain. The products aren't very good, right? It's hard to use. They're not well integrated. They don't compose with other products. It's a whole thing, right? And so that's a very difficult part of the story, right? Which leads to the second side, the other side of the same. The other side of the same coin, which is distribution. Ultimately, finding distribution is the hard thing. Every protocol knows you can tokenize things. It's hard, annoying, but it's painful. But going through all this pain to tokenize something and having no one buy it on the other side is the real problem, right? And so that's why we focus so much on RWA holders, because now we have people that actually want to hold these assets and do things with it, right? Because historically, it hasn't been the case. You launch and nobody comes. Right. And so that's why I think distribution ends up being the real thing. I think at the very bottom of the stack, more of a philosophical answer, right, as to what is actually inhibiting the growth here and what is the biggest barrier, is that at the end of the day, it's still too unknown as a category. And most people don't actually understand what they're doing here. Right? They don't understand the distinction between real world assets and crypto native assets. They don't understand that these things have nuance. They don't understand that that you need to do things like credit and rating. You don't understand that you have to do things like modify the protocols because the distribution payout's not the same. Right? People don't understand how these things work. So they think that they can apply a crypto lens to real world assets. You can just take something in the real world put it on chain and loop against it. It doesn't work, right? You have to change the product to make it loopable, right? And so that's the fundamental issue, is people don't understand yet what they're actually doing. We've spent the last couple of years focused on this, so we're very deep into it. We understand at a very deep level. And instead, also tells us there's a lot of things we don't know as well, but we know what's going on, versus a lot of people just trying to now do it because they think it's a trend, and not realizing that it's a bad idea, right? A lot of people are trying to loop against treasuries, right? It doesn't make any sense. Looping against treasuries is stupid. Right? Looping is the borrow rate on looping is 8%. Right, so it costs you 8% to borrow stables to loop. Right, if you're going to borrow 8%, put it into an asset that yields 5%, doesn't make any sense. Right, and yet people are trying to do that and it just shows you how little sophistication and thinking people are going into this story. They don't understand what they're actually doing here. Right, and so that's the fundamental issue. But all these things stack together to make it a very complicated thing.
Well, thank you. So I would say that was pretty far below the surface, and pretty interesting things to think about. So thank you. And moving on, we're always ask our guests to tell something about the image of their audience or customers. So we'll do it now as well also. So if I get it right, Plume is focused on institutional customers. Could you tell us who are your ideal customers or target audience, if you want? And what are the mechanisms adopted to protect their assets and rights?
Totally. I mean, I think, look, we focus on everything, but really, I would say the starting point for us is focusing on the crypto native user, right? Versus the true institutional customer, right? So we focus on both because just like any marketplace, you have to find supply side and the sell side, and the buy side, excuse me, right? You need one side to sell, one side to buy, right? On the supply side, we find, yes, institutional asset providers, asset issuers, all that kind of stuff. But on the demand side, we find crypto natives, right? People that are actually in crypto based. So that's our focus, and that's our initial target customer, right? And so what we do to help them understand is a couple of things. We build tools for the asset issuer to make it easy for them to bring their assets on chain and bring their tools on chain to monitor and manage the product, right? That's number one. On the buyer side, what we do is we build tools to make it easy for the buyer to consume these products, right? And to use these things, again, like looking at Nest as a simple example, right? The crypto native user is used to a simple UX, right? It's a box that says to, from, and swap, right? And all you do is you go in and you swap this asset, or you stake it, you get it. So we put our products and the reward assets into that user experience, right? So now I can go out and go to this asset, swap for this thing, and take it and go from there, right? And so that's the idea that on that side. And on the other side, what we do is for the asset issuer, we make it very easy for them to tokenize their asset by integrating with all these different products to make all these different protocols very easy to use there. And then on the other side, for the end user, also we provide them lots of information about the individual assets. We do tons of deep credit reporting around ratings and all these kinds of things. So you as an end user know if it's good, it's bad, it's scary, safe, and you kind of know how to utilize this thing. So those things that we do, it's both software that we build, but also sort of like system-wide that we build to try and make this thing work better.
Awesome. So focused on everything. I like this part. Okay, so now we have the image of your customer, and what about the competitors? So do you even think that you have some competitors in RWAFI? And if you do have, or probably you will, so what's your approach to compete and to confront with them or to collaborate?
Yeah, for sure. I mean, look, I think if you have no competitors, that means what you're doing is not useful, right? So of course we do have some, I would say, look, we started this story before everybody else did. We were one of the few to begin thinking about RWAs. We came up with the word RWFI, right? And we are the ones also to build a chain, this ecosystem, and to focus on this network, right? And really think about RWAs from a crypto native perspective. Permissionless, open, composable, right? Most things before this were very hard to use. That's why people didn't use them, right? They were gated. They were focused on institutional. It's focused on regulation. We're one of the first people to say we don't care about any of that, right? So, we've seen off the backs of that, a lot of other people try to come in and do the same thing, right? And coming off of our growth, people trying to come and do the same thing. It's okay. I think it's not a big deal. At the end of the day, I don't really care because the nice thing about the RWA market is that it's so big. If we look again at crypto, it's $3 trillion asset class, and you have dozens of chains already that work here, right? Now, when you can 10, 100, 1,000x the size of this, there are going to be way, way, way more chains, right? Way more things going on. And so generally speaking, is there competition in the short term? Sure, because some people are trying to take from us, or do this or copy our story, whatever, it's fine. It doesn't matter to me. In the midterm, there is no competition, right? Because at the end of the day, all we're doing is trying to grow crypto. right? And if we can actually grow crypto from 3 trillion as a simple example to even doubling it, 6 trillion, of which is tiny, right? BlackRock itself is $12 trillion asset manager. So one company is still 3 or 4 times all of crypto. If we can just double crypto, the amount of opportunity that's going to be here is enormous, right? And so I don't think there's any real competition from that perspective. And we're, in fact, okay working with everybody, right? And that's why, again, we work with Skylink. We are one of the few people to stream our yields to all of the ecosystems, to work with them, to help people use crypto better, no matter where you are. You could be on Solana, you could be on Jecta, you could be anywhere else. We're fine to work with you to help bring these assets on chain. Because ultimately, right, proving success for assets on chain and building this market is much more important than just us owning our little place. We want to make this whole thing work, not just us. And if the whole thing works, we will grow as a result. And so there are people trying to do similar things. They usually have it wrong, and they usually have the story incorrect, and they sort of are doing what we said we were doing 2 years ago. But they'll come around, of course. And more importantly, we'll work with them and help them become better, and also help them find their customer. There's so many verticals, so many areas to go into for RWAs, and so many ways to tackle this that it's only a positive sum world for us here.
Awesome. So extremely reasonable approach, I would say. So actually, nothing to add, and I think there is some set of mind that many founders can take from this answer. So thank you. And moving on to the section of some recent news and short-term announcements, maybe. So recently, you've integrated AUSD. So please tell us what it entails for your own pUSD and what's next on Plume's roadmap.
Yep, totally. Look, yeah, we recently integrated AUSD, and we're working with the Agora team to integrate their stablecoin to back ours, right? So we use pUSD on our network, right, as our stablecoin, which is meant to simply be a UX thing, right? It makes it easier for the end user to manage the liquidity pool. It makes it easier to sort of consolidate all the stables into one experience and all that. So that's what it is originally starting point for it, right, as user experiences thing. Now, what that means is over time we can sort of change the composition and update the composition of the stablecoin backing, right, to make it better and better, right? And the thing that's great about Agora, I think that we're very excited to work with them on is obviously their close relationship partnership with VanEck, right? Because of their relationship with VanEck, we really can work with them to allow for things like atomic swaps, right, and allow for things like instant redemption, instant liquidations, and instant transfers for these types of assets, right? Number one. Number two is today most RWA protocols only really accept one type of stablecoin, right? A circle, right? Sometimes they take Tether, sometimes they don't. But working with Agora, right, we can really begin to make AUSD integrated well into all these other different protocols as well, right? And all these other different RWA projects, right? So we can begin to expand the types of stablecoins that these folks use, right? And so I think it's a very important part of the story. I think stablecoins are a huge business, and they're a huge important driver for growth in crypto. And so we're excited to work with great folks like Nick and the Agora team to really push that forward to the next level, right? And go away from the traditional model of stablecoins, which is really there's no yield, right? It's centralized, it's hard to control, it's meant to one where you're also participating in the growth of the network of the stablecoin, you're earning the yield from that as well, and you're rewarded for holding something, right? And you're making more and more use of it as time goes on. And so instead of just Tether accruing a huge amount of money, right, on their own without sharing it, or Circle doing their own thing, right? Now everyone can participate, right, and really build together. So I think it's a very important part of the story. And I think, we'll work with a bunch of them. So I think that's number one. Number two, I think is, where do we continue to go from here? I think, really at the end of the day, what we've done is we've seen that the phase one of Plume and the mainnet was about getting people to hold these assets, right? Again, if you go to RWA holders today, right, Plume is the number one chain of all of crypto by a huge margin. We have over 100,000 users today holding assets, right? The top 5 combined have less than 100,000. Right. So we have more than the top 5 chains combined in just one network, right, holding different assets. And usually in these other networks, it's just T-bills. Again, for us, we have a mix between T-bills, corporate bonds, sovereign debt, right, CLOs. You've got all kinds of things, right, mixed together there, and people are holding different types of things. We're the only ones that have that kind of distribution, right? And so, to me, the second phase is now that you're beginning to expand the aperture for what people are actually doing with RWAs. Now the question is, how do we make better use of it, right? How do people loop against? How do people integrate this DeFi more? How do people hold this in a deep way? How do we get more yield out of it? How do we make this more interesting in other ways, right? And get more juice out of these things, right? So that's kind of the next phase for us, right? Which is going deeper into the ecosystem to make sure these assets are more composable, more useful everywhere, right? And you can find new yield opportunities, new yield sources. And lastly, I think after that is to begin to introduce a way to go multi-chain as well, to really make this, again, like our effort is to grow all of crypto. So how do we take this asset that's done really well and this use case that people really want and bring it to other places so we can get more users, more liquidity, right, and more distribution for these assets, right, while still letting the user who wants to be where they are get the best out of it. So that's kind of like where we're going. I think in the short term, right, it's really expanding on what we've done well today, right, going to the next level and then continue to push on that to continue bringing things outwards.
Wow, awesome. Yeah, I do believe that it's for sure a very important part of the story, as you say, and actually it's impossible not to mention, and I believe that all the viewers of Synopsis could not but mention how stable coins just got this hype train just in several months. It became, I would say, one of the most frequently pronounced words during our interview. So it's another big thing, and these integrations and these news are for sure a big milestone, and we'll see what's going next. And yeah, Chris, for you. So next question about tokenizing real world assets. So what is the hardest thing you do when it actually gets to the tokenizing RWAs?
I think the trickiest thing, it really depends on the asset class and depends on what's going on. I think the trickiest thing right now is simply just marrying all the parties together, right? I think people don't understand that actually putting together an RWA on chain and to make it useful is combining 10 or 20 different parties together, right? You have the asset issuer, you have the oracles, you have the tokenization provider, you have a legal entity, right? You have all these things. On the other side, you have protocols, you have capital providers, you have distribution, you have wallets, you have end users, right? Then you have other ecosystem partners to compose them. It's that entire flow of coordination that is very tricky, right? And so that to me is the hard part right now, right? Which is how do you put everyone into the same playing field? Everyone has different incentives, different levels of experience, different desires to do things. How do we put them all into one place? Right? And then how do we elevate the whole thing slowly, right? And make sure that people begin to understand. Most people don't understand any of these things today. So how do we push the whole thing forward? Last year when we were talking to LPs and talking to people, nobody cared about the stablecoin. Nobody cared about T-bills. They thought it was stupid, right? And today everyone's talking about T-bills again. And now nobody gets private credit and they're trying to think about that. And they think that's going to be exciting, right? And so, I think to me, it's the education to get people to understand this and help them understand a way in which it all comes together, because you have to show value to make it useful, right? People think bringing things on chain is just going to be good on its own. It's actually not. Most things when you tokenize and you put it on chain actually become worse, right? Like if you can buy T-bills today, you can log into your Fidelity account or whatever to buy T-bills. It's actually not bad. And buying a T-bill on chain is actually much worse, right? Not only are you taking more fees now because you have someone on chain managing this, but you're also taking on some more contract risk, right? So it becomes much worse than it was before, right? And so you have to make it better than what it was off chain. You have to make it better on chain, so someone actually has some desire to use this thing, right? Access is one powerful motivator, but there's many more things you can do there. So that's the integration. That's the tricky part, is how do you integrate this into a flow to make this actually very, very useful in order to keep growing this thing in the right way. So that's the thing that we're working on right now, which is education, it's alignment, it's coordination, right? Because there's so many people involved in this ecosystem that want to do something. It's how do you do it all effectively?
Wow, awesome. So for the next few questions I had prepared some things about regulations, but you already had a great take about it, and I think that we can probably skip it, and instead I would like to ask you some kind of philosophical maybe question to see what you think of the midterm or short or long term. So how do you think, Chris, what will happen first? 24/7 trading on global major stock exchanges, or global adoption where crypto and then tokenized real world assets are accessible from any online banking app?
Unfortunately, probably more 24/7 trading than the inverse. I think you're already seeing it happen, right? You're already seeing the folks like Robinhood. You're seeing folks like the different exchanges move in this direction because they realize this is where it's going. And it's much easier for them to turn on this feature than it is for the whole world to adopt tokenized assets to get distribution for these things, right? So it's just going to take more time for this to happen, right? And so that's why I've never been about the opinion that if you just tokenize and put it on chain, it makes it more useful, right? Or simply, we can just take something off chain and put it on chain and it finds new properties. No, it has to be better, because in the on chain world, we could just make it 24/7. It's fine, right? We can open up access. The whole world could trade in the New York Stock Exchange. Why would you buy equities on chain then? Right? If you could do that, right? So there are simple things that are happening right now that will make it very hard. So you have to make these things better off chain than on chain, on chain than off chain, to actually drive value. So what's going to happen first? I think these other things will happen first, but I think that's the limit as well, right? Because the problem with this is, at the end of the day, our belief is that an open ecosystem, right, creates innovation, right? Meaning people can build and pick up and do whatever they want with it, right? And so, sure, can different exchanges become 24/7 trading venues? Yes, they can do it very quickly. Just turn on, right? But the difference is that's all they can do. They can just turn on and they stop there. They have to now wait for the next thing. Versus when you build an open ecosystem, people will build and decide and innovate however they want to, and all kinds of new things will emerge out of nowhere, right? And that, to me, is the interesting stuff that was going to come into play.
Well, thank you. So I'm gonna see, and for sure, I'm kind of 90% agree with with your point of view. So it absolutely aligns with my vision, and it's cool to hear that. And yeah, actually, we've came to the last traditional final part of all our interviews. So the main part was, I would say, super energetic and insightful. There were several great quotes. Probably I will write them out and post it in the comments section. So pay attention for these guys. And the last thing, everyone is always eager to know from our guests. So some piece of advice, sharing some wisdom. So Chris, please go ahead and address to our audience whatever you find useful and what to keep an eye on, some call to action, whatever you think is needed to be heard right now. Please go ahead.
Totally. I think maybe two things. Maybe one is more practical than this. I think, when there's a lot of activity on something, people tend to think that it's over, right? And they're too late, right? It's just not true, right? You could have said that about Bitcoin for the last 10 years. We're too late at 10K, too late at 20K, too late at 50K, too late at 100K, right? I think it's still a long way to go. With this momentum behind something, right? That's where you want to get involved. And it's very clear the RWA story has a ton of momentum behind it right now, right? Things are really picking up in a very, very incredible way, right? And last year, nobody cared when we told about the RWAs. Today, everyone seems to think it's already here, maybe too late, right? And so just to say, I think this market is so big that people just don't understand how big it is. And there's so much more to come. People tend to forget all of this in front of us. And so I really, now is a great time to sort of get involved as a builder, as a content creator, as an investor, as whoever it might be, right? There are many ways to get involved, and there's many ways to do this, because I think this is the singular biggest opportunity, more transformative opportunity that we have in the world right now, right? To change the fabric of how the entire world interacts and transacts in different assets and holds value and stores value, right? It's a tremendous different opportunity that we just haven't seen before. And, it will take many, many years, decades to play out, but it will change things in a way that we can't even begin to imagine. So I think there's so much to come where we haven't even started, right? And so now's the time to really get in and build a position for yourself. People think it's too late. They already want it. It's not true, right? None of these things are true. There's 10, 20 years in front of us. So get involved and help build. There's so much to do here that we can all do this together. So that's number one. Number two, I'd say this is also, when you zoom in on that, I think the philosophical answer is this is like, again, people tend to follow narratives and trends. Everyone's doing a stable coin now, right? Which now maybe it's too late. It's not too many people are doing it, right? Like, you tend to want to be in a market and do something that's before people think it's good, right? When we started Plume, no one cared about RWAs. Everyone thought it was stupid, and now today people care, right? And so you have to be ahead of the curve, not too much though, right? Because if you're ahead too far, you're too early, and that's still wrong. Right. So I think really it's about understanding where you're on the cycle. Is this picture, is this story, is this sort of macro narrative correct? And if it is so, right, where do I play? Where's going to be the interesting? Last year, nobody cared about private credit. Now everyone's talking about private credit. Maybe that's the thing, right? No one cared about cross-border payments last year. Now people care about PayFi. Maybe that's the thing, right? So you have to be a little bit ahead of the curve to kind of figure out what this is. And so pick the right markets, pick your spots, and be a little bit ahead of the curve to play the game. And I think there's a tremendous amount to come here. So when I look across RWAs, there's so much opportunity. I think there's at least a dozen or so different spots that I would go into. And so I think it's a very, very good time for people to come and get involved.
Absolutely. Well, what a great ending we have, and you also added a few more quotes for this golden list. And yeah, everything sounds super encouraging, and thanks for sharing. That's it for today, Chris. Thank you for joining in. We'll be happy to see you in more episodes, and also we'll be happy to see you at the upcoming online Synopsis Summit. So staying connected. And thanks for our audience for watching till the end, guys. Stay tuned, subscribe to Synopsis, follow Chris, follow Plume, not to miss the big things which are coming. So everyone stay safe, and yeah, see you in more episodes. Bye bye, everyone.
Sounds good. Thank you. Thanks for having me.